Good morning, everybody. Welcome to another episode of SimpliFinance. I'm your host, Shane White, and it's Friday. So everyone should be pumped as we head into another weekend of being quarantined. Obviously, weekends have started to feel the same as weekdays, except there's no trading on the weekends. So might have to come up with something creative for everyone tomorrow. I'm thinking about doing an episode on cryptocurrency, if anyone's interested. It's the only thing you can really trade 24/7, 365. So might dive into what that is. And just an idea I had this morning, honestly, right now. So I'm going to jump into the podcast today. Going over the markets yesterday, green across the board. NASDAQ was up 1.72%. The S&P was up 2.5%. And the Dow Jones up 2.25%. So stocks over the last week really have kind of evened out a little bit. Every day seems to be a few basis points up or down, but nothing as drastic as we were seeing a few weeks ago when this coronavirus pandemic really hit hard. Stocks that I'm really focused on. So today I really want to dive in more into a sector, and there's 3 stocks that are on my tracker. Again, I have a rebound tracker. It's a free Google Sheet tool that any of you can use. It'll be in a link in the show notes. And really what that is it's just a dashboard of companies that I'm interested in right now, and specifically interested in regards to this market rebound once the coronavirus pandemic kind of irons itself out. So these are like the sectors and the specific companies that I'm interested in and I think will be great buying opportunities soon. So really, the sector I want to focus on this morning is automotive. If any of you have been paying attention to the news around these types of stocks, they're all falling, and they've actually been hit. They've been hit really hard over the last few weeks from this pandemic, and specifically over the last quarter, since the beginning of the year, really. All production of cars in the United States has stopped because of the social distancing orders. So what that means is none of these automotive companies are currently building any cars. There are 0 cars being built today in the United States, which is crazy. And really, I try to do a little research. I don't think that's happened since World War II, when a lot of the auto manufacturers started basically stopped making cars and started making airplanes and tanks and those types of things for military purposes. So the 3 that I'm really focused on right now, and this is just a kind of a general look, GM, so General Motors, Ford, which Ford, by the way, so I've never really talked about specific ticker symbols in here. So every company has its own ticker symbol, right? And that's what you search for in any browser to figure out, go to the company's dashboard. Ford is literally just the letter F. And I thought that was cool as fuck. You pretty much have to be an OG company in the stock market to have one letter and steal the letter F. So I thought that was a funny ad. So GM, Ford, and then, as you know, one of my favorites, my boys at Tesla. So across the board yesterday, all 3 of them had rough days. GM was down 5.5%, Ford was down nearly 1%, and Tesla led the way in the decline, down 5.6%. Over the last month, GM is down 37%. Over the last 3 months, they're down 49.3%. So they are kind of in the same boat as a lot of these, airlines that I talked about the other day. Their stock prices have been slashed nearly in half. Ford's in a similar situation. Over the last month, they're down 34.6%. Over the last 3 months, they're down 53%. So over half of their valuation has fallen down. Out of these 3, the only one that over the last month, Tesla's down 35%. So right there with Ford and GM. But over the last 3 months, they're the only ones that are still up. So they're still up 9.9% in Q1, which if any of you were following the stock market in Q1 or listening to me, Tesla was one of the best performing stocks I've ever had in Q1. Unfortunately, I didn't sell it at the top, but that's okay. That's, lessons learned. And Tesla jumped to its highest point it's ever been. So it's still riding that wave. So my whole point in this is the automotive sector will be an interesting area to really pay attention to over the next month as we get closer to these guys announcing earnings. So I will keep you guys posted on that. I'm planning on doing a deep dive into earnings this month, which I'm really excited about. That'll be one of the new things for SimpliFinance that I'll be bringing to the table. Essentially, every quarter, for most publicly traded companies, they're going to be releasing their quarterly earnings. So they'll be announcing to the general public how they performed during January, February, and March. This can swing a stock tremendously depending on the performance. And I'm assuming this earnings season, which is the month of April, and might spill a little bit into May, depending on when companies decide to make their announcement, is going to be a wild one. With the coronavirus pandemic hitting really hard in Q1, it's really unclear how bad it's been for some of these guys. So that'll be a fun thing to dive into, and I'm excited to share that with all of you. So today, concept of the day, very timely, I think, in just where the pandemic's at and things that people are really starting to focus on, and that's dividends. So today I'm really going to dive into dividends. I'm calling this Dividends 101. And it's going to be a little bit high level. I'm trying to simplify it as always. And I really just want you to walk away today kind of getting a good understanding of what dividends are, how you can add them to your portfolio and make it a little safer for you, especially in times like these. And honestly, it's just a great way to diversify your portfolio. It's something, to be completely honest, that I've not focused on in the first, give it, 5 to 7 years of me truly being a investor. I really focused on growth stocks, which someone who's, ready to take on risk, that's the place to always be. If you're young and you're making money and you're not worried about retirement in the sense of needing the money soon, a lot of us decide to throw a lot of our money into high growth stock. So anyway, I divest. Back to Dividends 101. So what are dividends? So really, dividends are just cash payments made from a company to its stakeholders based on company profits. So I'll break that down a little bit. So most people investing think about investing in companies that are going to grow, right? Most people think of the stock market as, hey, I see a stock that's worth $10. I'm hoping it goes to $100. If that happens, I make $90, right? Very true. Happens all the time. So most people are doing. But what you can do to diversify your portfolio is look for companies that are paying dividends. And that's not every company. So right off the bat, I want to explain, not every company pays dividends. And I honestly don't know the percent of companies that are in the market versus aren't. It's actually probably a good question I should look up after this. I'm going to write that down because it might be a good follow-up for social. And so what is that based on? So like I said, they pay it to your stockholders, which if you own one share, you're technically a stockholder, right? On company profits. So I'll kind of walk through, I think most people, if you've ever, looked at a company or, been through any type of business class, you probably know what a profit is, but I'm just going to simplify it, make sure everyone understands what that is first. So you think about a company, let's just look at 1 month, right? Let's say a company does $100 in sales. Then they have to subtract all their costs, right? So let's say, you're selling, phone cases, right? So let's say you sell a phone case for $100, very expensive phone case. You subtract out all your costs. So, what did it take to make it? What did it take to buy the raw materials? What did it take to pay the people that you have on your team? What did it take to market it online? What did it take to ship it? What did you end up paying in taxes on it? All of that. So any cost that you had, subtract that out. So again, you sold this phone case for $100. And for you guys listening and not on the video, I just held up my phone case that I have on my phone. So let's say you sold it for $100. The cost of goods is taking out all of your expenses. Sorry, is $50. So all those things I mentioned are $50. Your profit would be $50, right? So 100 minus all your costs, which is 50. You're left with $50. So now what's happening is if I'm company A, and I'm public, right? I have a stock and I'm publicly traded, and I have $50 left over. I can either decide to keep those $50, right, and put that back into my company, right? So maybe hiring more people. Maybe that money's going to go to developing our next and best, greatest phone case. Or maybe I can give it out in a dividend, which is going to excite people to come back and buy the stock. It's going to obviously be a reason people want to buy and hold on to our stock so they can get paid on a quarterly basis from us. But anyway, that's what a profit is, right? It's what you're left over with. And so that's where the dividend money is coming from, if that makes sense. And that's just in the most simplest terms, the money we made minus the money it took. So our revenue minus our expenses is our profit, right? Very, very simplified version of what a P&L or a profit and loss statement would look like, as well as an income statement, which are the same thing. So how do companies start offering dividends, right? Like if we started company A, it seems like it would take a long time for us to get to the point where we would want to start paying people to hold on to our stock, right? Like it's hard to envision that if you're going to start a new company tomorrow. And I agree, it really would be hard to kind of jump into that. So really, companies tend to transition into dividend payments, so really starting to pay a dividend on their stock when their growth trajectory begins to slow. So if you're a high growth company, so let's think of Facebook over the last decade, right? Every quarter, and every year, they're showing growth. So people are at that point, people are really jumping on for the ride, right? Most people on like a Facebook are jumping in to see the growth on the actual stock. They're the type of people, like I used in my previous example, who, it's $10. They think the price is going to $100, and they're going to ride it out and make their $90, right? What happens when companies get large and scale, and if you think of companies that have been in an industry for a long time, own a vast part of the market share, over time, and I'm on the video, I'm going to kind of show you the curve. What's called a hockey stick curve, right? So when you start a company and you are successful and you grow really fast, and I had this experience at the company I work for, you really slingshot up, right? So you start low, and it's like, in the first year or two, you really explode. You go from, $1 million in sales maybe to $200 million in sales in 2 years, and the growth is crazy on that curve. But then over time, you get to a point where, your market share, so the amount of dollars you're gaining from the general market of the product you sell versus all your competitors, you can't keep seeing that growth rate over time, because there comes to a point where your curve starts to flatten out, right? You're still making a lot of money, you're selling a ton of money, but year over year, that growth doesn't look as good as it used to. For a lot of investors, this becomes a part where you no longer have people wanting to jump on your company. You think about if you're only someone who's focused on the growth stage of a company's stock, well, you kind of missed out on all the growth, right? You could get in, it's a safe investment maybe, you might see some growth over time, but you're not going to see that 10 to 100 scenario anymore. You might see the 100 to the 110 or the 10 to 115, and that growth rate on your investment is a lot lower than it was when it was a 10, right? So companies that are large, who are getting to this point where the trajectory is starting to flatten out, and honestly have great cash flow. So like I said before, like maybe they're even in a better scenario where they sell $100 a month. Maybe at that point they've pinched their cost. Their cost is only 25, and they're making $75 on every month. That's when the dividend conversation starts to come out, right? Um, at that point, you want to make sure you're still getting new investors, you're exciting people, you're getting people to buy your stock and hold on to it because they believe in your company and they know it's a good investment. So offering a dividend can be a great lever for these companies to pull. It's good for them, right? It's a way to excite investors to get people investing in their company and help their stock price. It can also be, of course, a great lever for investors like you and me who want to diversify their portfolio in stable, larger companies, as well as thinking long term. This can start to become a really big play for monthly income for you. So you think about, someday you'd love to get to a point if you're a big investor like myself, where you hope you're making money consistently off your investments. I mean, that's kind of one of the goals of a lot of people. So, so yeah, that's kind of the background of what a dividend is. And basically, the company decides. I'll kind of get into like the how it's decided, right? So the board of directors for any public company, which is usually the CEO for the most part, sits on the board of directors. Not in all companies, but in a lot of scenarios. So the CEO of the company will sit on the board, and then generally they have a variety of other people from different industries, from different trusted positions around the country and world that are hired to be on the board of directors. And really, it's like the team on top of the company that isn't a part of the day-to-day, but meets quarterly or monthly, and they meet and make essentially the highest level decision making for the company. And one of the things that group of people will do is decide each quarter on how much they're going to pay out, right? So Apple, for example, is one of the highest paying dividends right now on a per dollar basis, and they pay 78 cents per dollar, or per share, I guess, sorry. So for every share of Apple you own, they pay 78 cents a quarter back to you. And the key here is it's set every quarter. It can move, but once a company starts paying dividends, it's extremely rare that they stop paying. Because really, like I said before, once these companies are at a point where they want to give a dividend, they know they're not showing tons of growth year over year anymore. They've stabilized, and so this is getting people to come in and invest, right? And people start to rely on these dividends. I have some friends who have family members who are older now, who a good example is they invested in Walmart when Walmart had just started. They make thousands of dollars a quarter getting paid in Walmart dividends. Over time, if you invest enough, it can become real money. So once companies start paying dividends, it's extremely rare that they stop paying, right? This can really add stability in your portfolio as cash payments are likely to continue long term. One of the key points there, though, the hope is it continues long term, right? But with anything in investing, there is risk. And I want to make sure everyone knows right off the bat that dividends are not guaranteed. They're absolutely not guaranteed. There's a risk if things in the market go sour. And to be honest, that's why I said this is timely, because this pandemic is putting a strain on every company right now. And I think this could be one of those times, one of the handful of times in all of our lifetimes where we see companies pull back on dividends. It's very possible if they can't afford it, depending on the industry. Now, a lot of people in the investment community would argue that pulling back on a dividend is essentially financial suicide for a company, because if someone is relying on your company, they know you're not growing as fast as they could put money into, a Tesla, an Apple, a Facebook back in the day when those were growing. If someone's deciding not to invest in them so that they can receive a dividend for you and then you pull that dividend, you've lost the trust of a lot of people and you're unlikely to get them back. In 99% of scenarios, companies are trying to add to that dividend payout. It's kind of like a competition. These companies are all trying to compete on who can give a larger dividend. So normally, if companies can afford it, they're going to try to keep pumping that dividend up, even if it's really small amounts. They're over time going to try to increase that constantly. Um, so yeah, that's kind of an overview of what dividends are, how they work, how they're decided. Honestly, it's a really good way to diversify your portfolio. I think for me and Kelly, one of the things I'm trying to do is after this pandemic, I really want to get our portfolio in a place where we have a lot of high risk on fast growing growth stocks, but then also a decent size part of our portfolio dedicated to stable companies that are paying dividends. So as we see the growth, hopefully over here, we're also protecting ourselves and getting cash income. Like I said, this can really help build future wealth down the line. I think if you're someone, I'm 28, if you're someone in my shoes who is new and trying to really start investing more, it's really a great way to, again, protect yourself in times like this, um, as well as build potential future wealth for you and your family. Um, it's an exciting thing to add to your portfolio. I think a lot of people that invest in some of these companies don't even realize they're getting dividends and they get it paid back to them. So something just to keep an eye out for, something to look at. Definitely take a look at the rebound tracker that I will post a link to in my show notes on all these platforms. And let me know what you think. But yeah, definitely keep track of some of these. I'll make sure I call it out in the tracker on which one pays dividends and how much. So yeah, that's Dividends 101. I definitely could go into a dividends, 102 or 201 at some point if people are interested and go a little deeper. But I hope you guys enjoyed it. Hope you have a great, great Friday. Trying to finish this week strong. I don't want to necessarily be this guy trying to preach positivity all the time, but it's tough times. So do what you can to have a great Friday and a great weekend. Hope all of you stay safe, and we'll be back soon with another episode. So happy Friday. Thanks for listening. Have a great day.